Newsletter subscribers and CCI premium clients, I always love bringing you these episodes around about mid-month where we just recap our buy and sell signals that we showcased in our monthly newsletter from last month. And I think it's super important because there's a lot of macro things going on at the moment, and the aim of our buy and sell signals, at least in the recent memory, has been more focused on the longer term investor. So I've gone out to the weekly charts. I've created some very, very strong support and resistance levels for you to all see and educate yourselves on. You can also use them in your own investing as well. That's super important. And I want to just go over how things are tracking, see as the candles and the price action moves into the areas. Some of them won't have been hit, that's okay, but some of them have, and I think it's super illuminating. And I'll maybe discuss my own insights and thoughts on whether for the upcoming newsletter, which we'll release next week, whether it will be changing too much or tweaking things at all, really. So I'll just dive into that now and show you what I'm thinking. So let's begin with Big Daddy old Bitcoin. So BTC, generally doing exactly what we thought it might, just going into more macro headwinds, more interest rate rises, more issues with Russia and Ukraine, and just generally a lot of negative news that was hanging over our heads. Just really aren't seeing too much of a change until let's say the back end of Q4 or early Q1. So nothing's really changing here. We're still looking to really grind out that bottom in an accumulation zone, reasonably similar to 2019, to be honest. If you go back to the weekly in 2019, the bear market, we're in this sort of zone, very similar to this one, for about 145 days. So nothing too crazy. And I think we're all a little bit on edge just based on the macro and that negativity, waiting for potentially a big move to the downside pretty quick, pretty fast, really take out some of those levels beneath us. That's if, legacy markets, also legacy traditional markets like S&P 500 or, a major credit crisis happens where something breaks and the Fed has to step in. But before that would happen, generally you do see that overall market massive panic, straight into dollars, and then US Treasuries afterwards. But that's generally how we see it play out. Whether that's going to happen, I'm not sure. And I've been discussing it in our premium videos with VIPs and masterminds that when the entire market, and generally what I'm seeing on Twitter and Facebook, when everyone's focused on something and when consensus is generally in agreement, and I'm not talking about just retail and the populace, but I think people that look at markets and know what they're talking about, there is this air that we're in a real crisis point. We're going to have a break, and we're going to get really smashed down to the downside, not just in Bitcoin, but just in general traditional markets. There is a bit of consensus, and when there is a consensus, there is often money to be made, being the contrarian on that, where we've sort of seen the max doom and gloom. We could go down a bit lower for sure, but are we going to see that 50% haircut, 2008 style, or 2020 style? Just don't know. So I just want to put that on your radar that while everyone expects something, just be wary that it may not happen. And that's why I guess we do employ the dollar cost averaging strategy if you think we're at an extreme point in the market, which it certainly does look like we are based on a lot of metrics we discuss in the newsletter. Bitcoin here, like we just discussed, it is just really trying to hold that floor of volume support over here. And all these weeks are just pounding into that area around about 19,000. Again, trying to really confirm that bottom. We still haven't made a new low, and that still gives me a bit of confidence that we won't see one. So 17,500, also a lot of dynamics that were built into that moment, the capitulation, the contagion, Three Arrows Capital going under, Tesla selling their billions we didn't know about till afterwards. You saw a bit of a front running of the liquidity crisis in crypto, and it all happened at once. So a ton of leverage got wiped out of the system in that moment, and we saw record realized losses. We also saw the most losses on the weekly chart, the highest volume on the weekly chart that we've ever seen. So, lots of things point to me that was capitulation. Again, not saying we can't go back to those lows or lower, which is why we have these very strong areas to look at if you're looking to do correction buys or moving through the strategies that we're teaching in the course. I do have 10,000 still as that danger zone. I mean, below that, it just would be an absolute generational buy, in my opinion. That might not be yours. You might think we're going back to 3,000, something along those lines. But historically, once we've made this capitulation low, it's fairly few and far between the percentages that we fall lower. But again, I don't want to say that you can't make these levels. If just say if the whole financial system just gets locked up, you just don't know what could happen. So danger zone 10, but anything below it, think of it may not be there too long. That, I guess, what I'm trying to get across is that it will be such an opportunity that I think savvy buyers will scoop it up. but down to 15,000, 10,000, that's probably the area where we would probably see a lot of buyers step in. And I've seen the orders all stacked up in these areas, as well as long-term moving averages, the 300-week moving average, the 400-week moving average. So it all snakes through here. And these levels would be historically oversold for Bitcoin. So just keep that in mind, that it does seem like we are at an extreme of the market, still on the 200-week moving average, trying to grind out this low, big volume support here at 19,000. Don't want to lose that. Otherwise, we're going into these boxes here, and then you have to start to think about there isn't really too much. Once we break that 19,000, we head down to 17. There really isn't a lot of volume in there. I mean, historically, there's been a bit of volume. You can see here with these two bars here, but this big gap here between this one and this floor, you just have to be prepared that if this cracks and cracks hard, it'll go on probably 12,000 before we really feel that support. So just be aware. I don't think this is going to change too much. I think this is a really solid platform to build into the next phase of the market. So we're not going to go straight into a bull market, but once we're out of this phase and we start to climb higher, these areas will be looked upon as a pretty solid area to DCA and move into the market. See, we're already in our buy zone, 23,000 down to 19,000. So we put this in when Bitcoin was actually moving back towards the 200-week moving average, or just a bit lower there. So that's already hit. That's really nice. We've even cracked into our next buy zone, the 19,000, 1,500. So if you're savvy investors, you would already have your buy orders set on exchange, and some of these would be hit. So again, I don't think anything's going to change too much for Bitcoin. Also have first sell point at around about 28,000. When this does reverse, and 38,000. You can read the newsletter and see why we have those points. I won't likely go into those again, but they're all around moving averages and where we see resistance and volume support and whatnot. Okay, let's move on to Ethereum because, yeah, this is actually looking rather, I guess, our buy zones are looking good for Ethereum to continue to move into them and for you to grab value as they do so after the buy the rumor, sell the news pump. So we saw the strong move up with Ethereum up to this moving average. That could be the 100 or the 50. We pounded into that, came down, came back up again, and then the macro really took over. The big CPI prints happened, and we've fallen down to the 200-week moving average. Now, Ethereum hasn't really traded too much under the 200-week like Bitcoin has, so this is a key signpost. If it breaks down here, these buy zones are in play. Strong buy, kitchen sink, they're all in play. Danger zone at 800. If it goes beneath 800, it's going to drop down to probably around that 500 to 400 area, so just be aware of that. But here does look like the market is still in that downward trending motion. You can see this line here, can't break it. It's even tucking in a little bit deeper here, which is interesting. Wouldn't be surprised to see Ethereum at some point, grind through here and then come back and test these areas. But in that meantime, you're probably going to see it grind through these buy and strong buy zones, and any drops in the kitchen sink should be looked at quite favorably. So Ethereum, I think this still looks pretty good for next month, if I'm honest. And you see Ethereum's just butting up against this key horizontal support. So that tells me if this week closes beneath this horizontal support, it's more likely than not, and as it is, it's sandwiched between 200 and that horizontal, we're very likely to explore some of these areas if we can't get back above that horizontal. Okay, let's move on over to Link, because I think we had some success with Link already with these buys. And you can, some of the Bitcoin and Ethereum charts as well, there was a little bit of, if you were doing shorter term trades, you can make a little bit of money there. But you see it dipped into this buy zone here. We had about 6, or between 7 and 6. So if you, let's say you bought at the bottom of that, you rode that up, that's a 36% move higher. That is nothing to sneeze at. And now we're having the grind back down. If Bitcoin, Ethereum, traditional market show weakness, these areas are all in play, obviously. But this area is going to be very difficult to crack. And so $6 or $5.50 is going to be very difficult to crack because of this huge volume band. It's just sitting here. It's anything that dips into this is getting mopped up. So just be aware of that. This one could show a little bit more strength than others based on how strong this support zone is. And as well, I just want to highlight just how clear and obvious that is, the danger zone at 4, because once it breaches that, it's just rolling down. There's not a lot of volume on the right-hand side. If at all, you can see it's just ducked in as I zoomed out. But on this mode here, this is the area where the most volume has been. But this will drop down fairly quickly in line with what we saw in 2019. But whether we get there, you just don't know. All right, DOT. Yeah, DOT. So not looking overly flash, but if you're looking at the longer term, you can see it's looking like it wants to come back down into these strong buy zones. So this trend line, you can see the trend is very clearly down. It's ducking a bit lower. I think this is going into that strong buy area. Just have to be wary that once it gets into these two lines here, this is a new range. It will bounce around in this. So the strong buy kitchen sink, you might have a little bit more time to accumulate in there. But yeah, as long as it's beneath this, say, this diagonal trend line, it's every chance that it's going to come back into these strong buy areas. But once again, you've got a very strong volume support here. You don't want to lose it because it has provided strong support here. And a lot of these altcoins, if we see a moment of serious instability in markets, could absolutely wick into those areas, but it might only be there for, very, very quickly as these levels are recognized as a very strong area to buy, because we are at an extreme of the market. So there's why you need to have orders placed on exchange. If you are interested in some of, let's say, the more extreme buy areas that we've got, the kitchen sinks, to actually take advantage of that. Sometimes they will just grind and drop into them just normally and stay there for a little while, sure. But some of these cryptos with really strong support levels, where clearly the market is trying to form a bottom, if it does drop below these areas, it can be quite fleeting. So just be aware of that. Yeah, DOT looking a little bit anxious there on that volume support, and $10 seems quite a good target in the the short to mid term. If it breaks this area, it goes up to 10, but beyond that, it's a bit hard to see any sell zones just yet. Okay, Cosmos, hasn't this been on a terrific run? And so far, it hasn't even gone into our strong buy kitchen sink areas at all. I'm going to have to, I will have to change this and bring this up to replicate, or in reference to these volume areas that are now moving up. You can just see here's a beautiful higher low trend. So you've got the low here, just beautiful higher lows moving up. This larger higher low up here, making higher highs all the way through here. Nice bounce, and then it's looking like coming back down. It's had a nice bounce off this moving average here, and it's coming down again. So I don't think these are in play right now, unless there's a really strong rejection up here. But Adam, moving down, if some of these areas have already been hit, which is nice, not $20, but it was getting up there. But obviously we didn't have those buy zones set up there. This was a bit more conservative because Adam was running so strongly. You can look at it both two ways, really. Relative strength shows that it's likely going to hold up when larger caps recover, or in moments of instability. Or you could look at it like the Ethereum, where there's a fundamental catalyst coming up, buy the rumor, sell the news. It's running for a reason. As soon as it hits, it's going to come back down and retrace deeper. I'm still in that mode. I haven't looked into why Adam is potentially moving here, but you can see here that this move will peter out, and I expect it could get to 20, sure. But in this environment, I think it's unlikely to go too much harder, and it will drop back down. I'm thinking maybe to this support, maybe a little bit lower. Regardless, though, this strong buy in kitchen sinks probably a little bit low right now. Probably move the danger zone up to this this local low and play it by ear from there. But yeah, we still want to keep the longer term thesis going on the bias. But let's say a pullback to the kitchen sink from here, that would be a 68% retracement. It seems a bit extreme after the market's already down about 90%. All right, AVAX. Yeah, so this is just performing really beautifully to come into our buy zones. If you were in this, whipped into there, you might have caught a buy, then it's come back down after testing these horizontal resistances, moving down to these areas. And I guess our newsletter was released late August, so you would have got this prime area here where you're just buying. Right now, it's resting on this key horizontal support in line with the previous June low. So just be aware of that. This should be a very strong area of support. If it cracks this here, then it's likely going into this range area with strong buy kitchen sink R, and you'll have a bit of fun in there if you're looking to accumulate for the mid to longer term. Danger zone just a bit lower there at $10. Psychological support also goes back to June 21. As that's so that looks pretty strong to me. I think AVAX is trying to form that higher lows situation over a longer period of time. Hopefully it bounces here. If it doesn't, that's fine. Probably coming to here somewhere. Just keep that in mind. So yeah, I don't think this will change too much for next month. I might have to actually amend the buy area to be a little bit tighter to the downside, because this still looks a little bit weak here. If it cracks this support, we're probably looking at more or better risk reward, rather, really just below this horizontal and just touching the bottom of this volume support. All right, Matisse. Now, it did look rather good last month before we did the signals, as if it was almost like an atom, where it was going up, moving back in a nice little short pullback, and then it was going to have a bounce to make that higher high and more higher low. But no, it cracked through with the CPI print. A lot of altcoins did that, but Matisse got hit pretty hard. Doesn't surprise me in the sense that if Ethereum saw the buy the rumor, sell the news, then a lot of the layer twos would as well. So that did happen. And now Matisse is just dropping beautifully into these cradle zones, into these buy areas that we have here. You can see the volume support in here on the kitchen sink and strong buy. This to me is a pretty good looking area of support. It's going to soak up a lot of liquidity, and these sellers should just fall into the buyers quite nicely. You'd be a bit worried if it does crack this 13 area, because it's going back down to single digits after that. But in this area, I think this looks quite positive. As a nice cradle zone to buy, and right now it's in the strong buy area. Hasn't even reached where we saw peak volume, so that's quite nice in itself. All right, let's have a look at Matic. So Matic's done really well to avoid our buy zones and having a stronger pullback into them. It's just showing relative strength across the board. This is quite lovely how it's just moving into this almost like a little wedge here. You can see it's trying to form something like that, and it could absolutely bounce up higher and then blast higher above was that $1. But right now with the market as it is, it's got this horizontal beneath it. We just have to be very cognizant of that, and if it breaks that, then the risk reward areas are quite huge beneath. So this is where you really want to go heavier on Matic. By all means, if you're doing DCR and it's from or correction by, it's 30% down since this move, so that is nothing to sneeze at either, and this is over multiple weeks. So you wouldn't begrudge yourself from looking at maybe buying some here at all. But I'm actually looking at this thinking that I need to move up these buy zones. Might need to move this one here a bit tighter up into this area here, up with this key horizontal, just to reflect the relative strength of Matic. All right, XMR, everyone's favorite privacy coin, Monero. Overall, it's falling into this wedge. May work out, may not, but it even showed weakness coming back up to this top of the line. So this may be invalidated now because we haven't had the third touch. Yeah, regardless, it is falling beautifully into our buy cradle zone. So these areas here, high volume moving down, you wouldn't really want to see it crack this into this kitchen sink and danger zone at 100 again. It will probably be quite strong support there, but you would get a little bit anxious as it's coming down to this area here. Still, excellent potential to buy in here for a bounce of XMR at some point, especially with the world as it is moving towards CBDC. So this here, I don't think we really need to amend this the buy zones. I think they're quite strong. If you have any questions about any of this as well, guys, please let me know and I will pass them on. So this is Engine. So it looks like it's doing pretty well here, but the buy zones were much tighter than other cryptos. Yeah, so we've moved into the strong buy, had the pump like most, and now we're just inching down into that strong buy. Found resistance here at this white key horizontal. You can see this horizontal white line. It's wicking into it. Obviously got a bit more time before this weekly close, 4 days, but being under this is a bit of a problem. You want it to rally above it back in this buy zone for this corrective phase to be over and to move higher to maybe some of these sell zones. Some of these sell zones will have to be moved down as well, I think, if you're looking for shorter term take profit areas. That 0.74 area looks pretty good. But to me, if it stays under this white horizontal, just like a couple of other cryptos we've shown you here, it's going to be range bound in this area unless it breaks the danger zone or it breaks back out. So you just have to keep that in mind, that you will likely have a bit more time to accumulate in these areas in the market state. So that's the state of play for me, guys. And I think we are all very keenly noting, I should say, what's going to happen with the Federal Reserve and their inflation rate forecast for, I think they're releasing it tonight. So there's a bit of chatter that they're going to be a bit more hawkish than maybe what you think. So 0.75 is consensus. Most pundits think they're going to come in as that, but there's a bit of talk that they might actually go 1% or even 1.5, because if they're just going to go hard until something breaks, you may as well go as hard as they can. 100 basis points a clip, 1%. 1.5%, and really get on top of it as fast as they can, especially with things sort of spiraling out of control in Europe. So there is a bit of thought of that. Markets, if it goes to 1% or higher, they're going to react pretty badly. I think we're going to go down another leg. So that's something to pay attention to, of course. And overnight as well, I'm just throwing some extra nuggets out there. We've got Vladimir Putin doing a national address, and there's quite a bit of chatter that he's going to look at general mobilization was going to be the sort of the consensus held view that he was going to do that. He stopped that. Speech announcement was cancelled, and apparently some very angry phone calls from Western leaders and internally as well. Not very popular for general mobilization to go all in Ukraine, so maybe more scaled back, but that doesn't matter. There's going to be a speech tonight, in line with interest rate rises as well. So it's going to be a very big, action-packed night for financial markets. So don't be surprised to see quite a bit of turbulence over this period, because macro is the biggest driver, and that means Russia, Ukraine, that means interest rates, that means the Fed. So just keep that in mind and enjoy your investing.